Do you think home prices are going up or down in the Grand Rapids area? Well, watch this video and find out the truth. Welcome to the Grand Rapids, Michigan, Kent County residential real estate market update with data through March 2023. My name is Rodney Constable. I'm a realtor with 616 Realty in Grand Rapids, Michigan. Year over year, home prices are up 1.7% in the Grand Rapids area, with the average home selling for $334,219. 1 year ago, the average home was selling for $328,617. Now, when we look at the last 8 years of data, we already know that the average home, and again, guys, what we're looking at here is the first 3 months of each of the years, right? So we're comparing exact data, January, February, March, the average selling price for a home in the Grand Rapids area, Kent County, during 2023 so far. The average home price has been $334,219. Last year, during 2022, for the first 3 months of the year, the average home price $328,617. The differential, as we can see, $5,602. Right, so the average home now in the first 3 months, during the first 3 months of 2023, is selling for $5,602 more than what it was selling for during the first 3 months of 2022. And then when we work our way down the chart, we can see starting in 2016, let's start at 2016, work our way up. We've got 8 years of data here, and we can clearly see that home prices have steadily risen year over year over year over year. Now, if you watched my videos for January and February, and I would encourage you to watch this information, guys, every single month, whether you're in the market to, sell or buy a house right now or not. And when you are ready, please give me a call. Let me help you. I promise I will take good care of you. But when I want you to know the truth, right? Well, that's why I do these videos. Right? I want to earn your trust. I want to earn your business, but I want you to understand the facts. There's so much misinformation out there. It drives me nuts. These are the numbers. This is the exact data, right? This is the truth. This is reality, all right? And we can see that home prices have steadily risen in the Grand Rapids area over the last 8 years. And this year, during 2023 so far, is no difference. Now, January, February, we had a slight pullback. All right, to kind of finish that thought there, we did have a slight, and I mean a very slight pullback in January and February for the average selling price of a home in Grand Rapids. But now with March, we've caught back up, and as we know, right, I'm going to back up a couple of slides here. We're up 1.7% for the average home price during the first 3 months of this year. Now, the average home is selling after being on the market for 25 days, which is a pretty fast clip, all right? The average home that has gone unsold, however, has been on the market for 91 days. Now, what these two data points tell us when we compare them is that if a home is properly priced, it will sell in a relatively short period of time. On average right now, 25 days, a little over 3 weeks. However, if a home is not properly priced for its location, condition, and amenities, it will stay on the market for an extended period of time, right now about 3 months. Next, let's move on to year-to-date new listings. Now, here is where we're seeing a big drop-off, guys, okay? So when you hear, well, the real estate market is slowing down, that is not the same thing, which is true, right? The number of properties selling, the number of properties being listed is slowing down. That is not the same thing as housing prices falling. So we have to make sure we're looking at the facts, which again is another reason why I do the videos the way I do, so that you have the truth, all right? So year-to-date new listings versus 1 year ago, down 14.08%. That is a big drop. Okay, and a lot of this, and I'm going to touch on this just real quick here, and you've heard me talk about this in the past, but it's called golden handcuffs, all right? A lot of people have refinanced, most people with a mortgage, right? And about 38% or so of all homes are debt-free, mortgage-free. So of those homes, roughly 60 to 62% of all homes are financed, and roughly 80 or 85%, right, somewhere in that window of those homes that are financed have refinanced at a sub-4 mortgage rate, all right? So the point is that a lot of people have refinanced over the last few years when we had extremely low, artificially low, unsustainably low mortgage rates, and they are going to be very hesitant about putting their home on the market, whether they want to sell or not. Maybe they want to move down to Florida. Maybe they want to downsize or whatever. But if they don't absolutely have to move, then a lot of people right now are not going to put their house on the market. Okay, so that's where a lot of this is going to come in. And also, if they do have, say, a 3 or 4% mortgage, and maybe they do want to move, but they're looking at a 6.5% or so to buy their next home. They're going to go, if I can just maybe do a few upgrades on this property that I have here, or live with it for another year or two, I'm going to buy myself some time. I don't want to sell a 3% mortgage or a 4% mortgage and go out and buy a house with a 6.5% mortgage. All right. So those are just the realities of where we're at right now. All right. And it's called golden handcuffs. And so that is going to continue to cause constraints on the number of properties that are going to be listed. So in other words, there's going to be a lack of homes being listed. So if you are on the buyer side, I want you to have the realistic expectations of supply and demand. There's going to be fewer homes listed, therefore homes are going to probably continue to go up in value, just like we're seeing. They may not go up 10% a year, right? But over time, 5% plus or minus is about a good long-term average for homes in the United States, across the United States. All right, so 4 to 6%. So let's call it 5%. And I took a deep dive on this on another video that I produced clear back in 2019, guys. And by the way, I was with a different broker at that time, but that video is still out on this YouTube channel. So you can go out and find it, to go back to June of 2019, and you can find some of the videos I put out there. And you're going to see how accurate that information was, all right? But anyway, year-to-date new listings down 14.08%. Now, when we look at this in a numerical format, we can see so far for the first 3 months, again, the data runs through the end of January through the end of March for 2023, we can see there was 1,587 properties listed in Kent County during that first 3 months, compared to 1,847 for the first 3 months of 2022. So we're down 260 properties. 260, of course, is 14.08% of 1847. And again, when we scroll down and look at the last 8 years of data, we can clearly see that at 1,587 properties listed for the first 3 months, that is by far the lowest amount of properties, the least amount of properties that we've seen come to market for the first 3 months of any year over the last 8 years. And look at where we're at versus 2016. Almost 1,000 properties, guys. Almost 1,000 properties less listed for the first 3 months of 2023 versus what we had in 2016. So a lot fewer properties coming to market, a lot fewer properties for buyers to choose from. Now, on the real estate side of things, and again, I want you to understand the facts, right? If you're in the real estate business like I am, there's less activity, okay? There's less properties being listed. There's less things to show. There's some people have been priced out because of new, higher interest rates. So they're either going to have to get a smaller home to fit within their monthly budget, or they're going to have to continue to rent. But I was talking to one of my colleagues yesterday, and he pointed out that a 2-bedroom apartment in some cases is $1,900 a month here in the Grand Rapids area, guys. $1,900 a month for a 2-bedroom apartment. Okay, so if you can get the money together for the down payment, and keep in mind you don't have to put 20% down on a property, right? Talk to your mortgage lender, and they can talk to you about the options. And but if you can buy a property, you may want to consider to do that, right? I cannot give you financial advice, but just when you look at the situation, it's just not, it's not likely, it's always possible, but it's not likely that we're going to see a massive drawdown in prices in the Grand Rapids area, because there's just not enough homes to go around. All right, as long as there's demand for housing, and the demand for housing appears to be still quite high. And by the way, even you can go back and look at some of my other videos, and maybe I'll do a separate video here over the next week or two on this. But guys, even at 6.5%, anything below 7% on a 30-year mortgage historically has been a pretty low number. All we basically did is go back to what's called regression to the mean. Keep in mind, I'm a former financial advisor, have an extensive background in finance, so some of the terminology I use and the way I think is because of my finance background. But we had a regression to the mean. In other words, the interest rates, right, the mortgage rates went back to about the average, the long-term average for the last 15 or so years in that mid-6 range. And it'll waffle around, it'll vary a little bit here, but if you're waiting to buy a home thinking that you're going to get a 3% or even a 4% mortgage on a 30-year fixed-rate mortgage anytime soon, guys, it may never happen again in our lifetime, and I mean that quite sincerely, okay? So, again, talk to your mortgage lender. They can explain the options, but I don't think that is probably a good strategy. It's always up to you what you do with your money. But if you're waiting to buy a home, waiting to get a 3 or even a 4% 30-year fixed-rate mortgage before you buy a property, you may be renting for the rest of your life, and those are just the facts, okay? That's reality, all right? So year-to-date new listings, again, we can see, starting in 2016, we started to see kind of a steady drop-off, right? And we had a little bit of an uptick in 2020 for the first 3 months. Again, COVID really didn't kick in until March of 2020, and then it dropped off. But you can see 2021, 2022, 2023, we're seeing fewer and fewer properties listed in the Grand Rapids area. And as the number of listings drop off, that will continue to support home prices because of demand versus supply. Next, let's look at year-to-date closed transactions. So what we've been looking at so far, average price, the homes sold and the number of homes listed. But now let's get down to the closed transactions. So these are the properties that actually sold of those that were listed. So in this category, we're down 6.5% year over year. Again, looking at the first 3 months of each year. And we can see that for the first 3 months of 2023, we had 1,409 properties close in the Grand Rapids area. We're down 98 properties or 6.5% versus where we were in 2022. Again, looking at 2016 going up, looking at the last 8 years of data, we can clearly see 2016 had the highest number of closed transactions for the first 3 months of the year at 1950, and then we have dropped off, had a little bit of an uptick in 2020, and then since 2020, and remember, since 2020, right, post-COVID, you would think intuitively that, because we really couldn't go out and show houses for quite a while in 2020. So there was a lot of activity that couldn't happen by law because we were locked down. But you can see in 2021, we had fewer sales than what we did in 2020. And then in 2022, it dropped off. And now in 2023, it dropped off again. So, again, guys, there's fewer and fewer closed transactions. So this is where we're seeing a slowdown in the real estate business, right? Because, the brokers that we work for, I'm an agent, right? I work for my broker, 616 Realty. They're seeing fewer transactions. There's fewer transactions for us when you think about the inspectors and the appraisers and the lenders and the title companies and everybody that's involved. And there's quite a few steps, right? It's a complicated sale. There's quite a few people that are involved in the sale of a residential property. There's less volume, there's less transactions, there's less revenue in the industry. So this is where we're seeing a slowdown in real estate, right, is in the real estate business itself. But that doesn't necessarily mean, as we're seeing, that home prices are falling. Home prices aren't falling. Home prices are stable to slightly up, at least right now, versus where they were in 2022, and then, of course, for the previous years. All right, so now let's take a look at the average months of inventory in Kent County. Now, in this category, I have more data available to me. The data goes back to 2013, So I have now 11 years of data. Now, in this one, it's a little bit different, right? So I've got the entire calendar year from 2013 all the way through 2022, and then 2023, obviously, is just the first 3 months of data. right? Where the previous data sets, we were comparing exact time frames, the first 3 months of each year. Here, we're looking at the entire calendar year for 10 years, from 2013 to 2022, and then the first 3 months of 2023. So right now, where we're at in 2023, we're running 0.9 months of inventory. That's about 27 plus or minus days. Now, what this means is that based on our current sell rate, right, how many homes we're selling, if no new homes came to market, no new listings came to market, based on our current sell rate, we would be completely sold out of homes in the entire county of Kent County in about 27 days. All right, guys, that is really, really low inventory. And then if we look down over the last 11 years of data, we can see that in 2014, by far, the highest inventory level, about 2.5 times what we have right now, 2.3 months of inventory in 2014. Well, guys, I can tell you that 2014, right, even at 2.3 months of inventory, highest inventory level that we've seen in over a decade in Grand Rapids, 2.3 months of inventory is really low inventory in and of itself. And here we are at 0.9 months of inventory. We had 0.9 last year. We had 0.6. We had about 8. Over the average of 2021, we averaged about 18 days of inventory, guys. When you get inventory numbers this low, this in and of itself is one of the key components that will continue to support rising home prices in Grand Rapids. So why does inventory matter? Well, as we can see here, if you have between 1 and 2 months of inventory, you probably are going to experience double-digit price appreciation on homes. And that is exactly what we have seen for many years here in the Grand Rapids area. If you're running between 3 and 4 months of inventory, you would generally experience single-digit price appreciation. If the inventory built to where you had between 5 and 6 months of inventory, this is more of a normal, balanced, or neutral market where you might experience some price appreciation, but it would more than likely be in the low single digits. And if you're under 5 to 6 months of inventory, this is considered a seller's market, and that's exactly what we have seen for many years here in Grand Rapids. If you're over 6 months of inventory, this is considered a buyer's market. And if your inventory built to between 7 and 8 months, that's when you would most likely experience single-digit price depreciation. And then if the inventory built to 9 months plus, that's when you would likely see double-digit price depreciation. So 7 to 8 months of inventory, single-digit price depreciation, 9 months plus, that's when we start to get into double-digit price depreciation. Are you looking for a realtor you can trust? If so, look no further. When you are ready, let me put my decades of sales and business experience to work for you. Call me directly at 616-258-4782 to discuss your situation or to just talk about real estate. I look forward to helping you succeed. Once again, that phone number is 616-258-4782.